So we've got experts from both the investment with Dan here, and then on the banking side. John, let's talk with you. Some people may be thinking back in their experiences. Is the bank secure? Is their money safe? And why are you going to the step of closing lobbies and still delivering your goods?
Whew, that's a lot. Lots of angles there, Tim. First, yes, your money is safe. Your money is secure. Your financial institutions they're all in pretty good shape. I think a month ago, everything was clicking along very well. Bank valuations, bank stock prices were pretty good. With all this happened, we've spent a lot of time, literally over the last week, hour by hour. I'm sure everybody's had to do this, looking at what's the best way to proceed, what's the best way to keep everybody safe. All right, priority one at this point is keeping ourselves safe, keeping our family safe, and then keeping our employees safe. Right, that's the first thing. So this is changing so much. Literally, we had a meeting with our management team on Monday morning, and we said, we heard some places were closing lobbies. And we said, no, we'll keep the lobby open. A lot of our locations are in smaller communities, and the bank is the rock, right? So we said, no, we won't close the lobbies. Well, by the end of Monday and into Tuesday morning, it was pretty clear that this thing spreads so much so quickly. We said, all right, for safety reasons, we'll lock the lobbies. We'll encourage people to use the drive-through. But we want to be very clear, it's for safety reasons. And if you need to get in and transact business, then you can do so. You can call your lender, you can call your branch manager. We'll get you in the lobby to transact whatever business you need. If you need to get to your safe deposit box or coin, you can't really put coin through a drive-through tube. So please don't do that. I chuckle, but that has happened. If you clog up the drive-through tube with a few pounds of coins, that's a tough one. So the main message is it's safety reasons, but we are there, we are open, and if you need into your bank or your credit, it's not just, this is a financial institution issue, okay? And we have credit unions in town, we have banks in town. And we're actually fortunate in this town. We have a couple very strong credit unions that are headquartered here. So I communicate with them, and they communicate with me, and we share ideas. And all of us, the branches are locked but accessible. That's the main thing. Now let's talk about your money. Your money is safe, okay? If you need to get to your cash, you can get to it. We've had a small amount, couple customers only have called and said, do I need to take out a lot of cash, let's say sizable cash? And we tell them, yes, you can. We wouldn't recommend it. Your money is safe in your bank. The FDIC, in its history, has always covered insured deposits, okay? So there's not a risk to you losing any money. And the banks and the credit unions have plenty of cash, and you can get to your money. So I just saw this morning that there was some concern about banks limiting cash. We can only keep so much on hand, okay? So, Dan, if you want to come and take out $100,000 in cash, it might take us a little time to move money around, and we have to make sure we have enough for everybody.
Sure.
So it might take a couple days if you want significant cash, but you can get to it. It's your money. I saw the scammers are calling people or communicating with people saying they're the FDIC. It's not true. The FDIC does not call you. So unfortunately, when a crisis happens, the scammers start to do the things they do. So don't take any of that as possibly happening.
Dan, let's talk about 401ks, investments, and the like. And we've got probably a wide variety of experience with dealing with their retirement accounts. Not everybody's a Larry Kudlow out there that knows these intricacies. Some are thinking, holy mackerel, there's this chaos out there. I don't even know what I have, let alone what I should do. What would be your baseline first message to our viewers of what do I do? I'm in a bit of a panic on a number of things, not the least of which is my money.
Right. So good name drop, by the way, Larry Kudlow. So what I would suggest, and I would also echo what John talked about earlier, again, your financial professionals are also available to you. So even if their offices aren't open, we've chosen to keep ours open. We see clients by appointment, and they also pop in on occasion. But we're accessible to you just like the banks are. And I would strongly recommend that if you have questions similar to what Tim alluded to, you're reaching out to those financial professionals. Your 401k providers, they're out there. They provide information that you can get a hold of them and contact them if you do have information. Baseline, I would say one thing, if I had to recommend one thing, and I don't like blanket recommendations necessarily, Tim, but if you're contributing to your retirement plan and you were doing that 2 weeks ago, there is no question you should continue doing that. It seems to me that investment products, and John, correct me if I'm wrong here, but investment products seem to be the only things people do not like to buy when they're on sale. So when the prices go down, when the prices go down, heck, you know, you'll run to the grocery store and pick something up if it's on sale, but for some reason, clients don't like to buy when things get a little tumultuous. So that's number one. Number two is take a look at the way your 401k account is invested or your investment account. If you're working with a financial professional, hopefully that financial professional has already reached out to you. If not, you should reach out to them. But take a look at your asset allocation, determine if there's an opportunity. You know, we've had a pretty significant reduction in the prices of equity investments over the past couple of weeks, stock investments. And that may provide a nice rebalancing opportunity. So if your pie chart is a little bit out of whack now, you have a little bit more bonds than you have stocks in your portfolio, for obvious reasons, prices have moved around. Reallocate that portfolio perhaps, it's time to do that. Take advantage of what will, the world only ends once, right? It hasn't yet. So my suggestion is we probably come out of this in pretty good shape. And if you maintain your discipline, maintain your purchasing, and maintain your allocation, you're going to come out of it ahead.
So people are obviously in different stages of how close they are to retirement. Mm-hmm. How does your advice differ from a 25-year-old and somebody that is really on the threshold and the doorstep of retirement? How does your advice generally differ from those folks?
Sure. So, yeah, that can be a sticky one because we experienced that in 2008. People were on the cusp of retirement and suddenly lost half of their portfolio values. It can sometimes change plans. You have to be nimble enough to be able to respond to some of these issues. The advice I would provide is get out ahead of the curve. Make sure you're working with a financial professional well in advance of your retirement years. Now, if you're not fortunate enough to have been able to work with a financial professional historically, it's very, very important that you don't make a huge emotional decision without being duly informed. So if you're in a position where you're a year or less from retirement, now you're experiencing these market volatility issues, please reach out and contact a financial professional. They can give you the appropriate guidance. Do not make a rash decision. Don't make an emotional decision. And go, and I know cash is king. I don't want to, but you don't necessarily want to sell equity positions when prices are as depressed as they are right now. So get the proper guidance, contact your financial professional, contact your 401k provision. Oftentimes they won't give you advice directly, but if you contact an independent financial professional, they can help you.
So financial professionals can help, John, but you alluded to in your comment these ne'er-do-wells who maybe don't have your best interest at heart. What specific things can our audience look for? You mentioned they might get a phone call. Can you elaborate a little bit more on that?
The big picture ones, the email, the phone calls, Those are the two biggest. I mean, the IRS doesn't call you. The FDIC doesn't call you. They don't send you emails for the most. If they need to find you, they'll send you a letter.
And what would the ask be in this email?
You know, all I saw this morning was a ticker on the bottom that said people are being contacted with the suggestion that the FDIC is alerting people that they can't get to their money. And that is just not true.
Okay. So what does the low interest rate mean for borrowing? I mean, can people actively go in and borrow money, or has individual local lending ceased also? Tell us about that.
No, the lending is not ceased. Right now, the residential mortgage business, those rates really, typically if they moved 0.25% in a day in the residential world, that would be a fair amount. A quarter in a day would be probably a lot, okay, in normal times. Over the last 10 days, 2 weeks, residential mortgage rates have bumped 0.5 to 0.75%, and that's a lot. Okay, that's a ton. So we and many, probably all banks that do mortgage lending have a very large pipeline of mortgage loans right now. Okay, that's great. It's great for customers. It's great for consumers to get a 3%, 3.5% fixed rate mortgage. An issue that I see, well, there's two issues. One just popped up a couple days ago. In order to refinance your house, you need to get it appraised, right? One of our appraisers reached out and said, I'm not comfortable going into other people's homes. Now, if you want to refinance, you need your house appraised, but the federal regulations currently require an appraisal, and a full appraisal, meaning inside. Who could see that coming? So that may be an issue for us, for the mortgage business, and if they can't be appraised, then you can't get your loan. The other issue that is coming is employment. When you close, there's a rule that says 10 days before you close, we as the bank are supposed to verify your income. So I call Dan as the business owner and say, is John still working for you? And is it likely his employment will continue? We're seeing a lot of layoffs. If you are midstream in a refinance right now, that could impact you. We've have a call into Freddie Mac to say, okay, are you going to loosen some of these? Okay, so long answer, but the short end is yes, we're still lending. Rates are still very good, but that's the residential. The commercial lending is a little different. The start to finish process for a commercial loan is a little longer. Okay, so trying to get new money on the street commercially with everything going on, there's the underwriting process, there's current financial statements. Right now you can understand that we pretty much live on tax returns. If you come for a loan request from us, we're going to get a tax return from you from last year and see how much money you made. If you're a restaurant, you probably did pretty good last year, but your current revenue is now zero. There's really no way to lend on a restaurant right now. Or hotels are going to be the same way. Hotels are slowing down quite a bit. So there will be an issue in some pockets of commercial lending.
Okay. Dan, things are changing, it seems like, by the hour. Different updates and different incentives from the government and so forth. We've all heard that we're down 1,000 points, 3,000 points, and the range of what's happening on Wall Street. What sorts of things would you be looking for in that world that would be the first glimpse of some certainty of what's happening? Like this is a light at the end of the tunnel. What sort of things would you look for? Sure.
We don't like certainty in our industry, Tim. No, it's fine. Yeah, listening to John talk about mortgage rates is interesting because we've had similar surprising spread levels between market ups and downs in any given day. Very, very volatile markets to the extent up 10%, down 10% within one trading day. So we've seen a 20% trading range within the same day, which is just out of this world. I mean, you just don't get that kind of volatility.
30% in one day.
20% one day,
Oh,
from
20%.
1,000 down to 1,000 up, and
Got it.
1,000 down in pre-markets to 1,000 up, and at the close of the trading day. It's just been absolutely crazy. So that's an incredible range, and it's driven predominantly by the fact that people are afraid of what's happening with respect to the virus, and people are uncertain about the outcomes, and they're uncertain about what the economic impact is going to be coming out of it. And John alluded to a lot of it. We're seeing it to a large degree, how the sort of the last leg of the economic boom we've seen, which is the consumer spending money, has now kind of been taken out from under us. So looming recession, certainly. The markets tend to be a pretty significant predictor of those events, to the extent that they're about 6 weeks to 6 months in advance, depending on the severity of the economic conditions. As I'm analyzing the markets over the last few weeks, I'm starting to see this capitulation, meaning the markets are starting to wave a white flag a little bit, and they've come down 30% plus in about 20 trading days from their all-time market highs. That's absolutely significant. But now we're seeing them bounce kind of like a basketball, right? So we're seeing them go down 5% one day, come back up 3%, go down 4%, come back up 5%. That's what a bottom looks like. That's what the bottom kind of looks like. We've seen it in 08, 09, right? It just kind of bounces around until it finds that foothold. That one piece of good news, we can start that elevator ride back up. That elevator, which inevitably stops on a floor or two before you get all the way back up. But that's what we're starting to see. So while it's not certain, we are absolutely going to see some sort of an economic downturn, whether it's a recession, which is a downturn that extends over 2 quarters, whether it extends beyond that, we're just not sure yet. We know unemployment's going to go up to a very, very high degree for Q1 and certainly Q2. But we're starting to see the market predicting and building into the valuation of the stocks, those reductions in earnings.
So when we see, just as a point of education, when we see that the stock market, Wall Street, just says time out, we're stopping, what is the hope there that those sorts of tactics introduce?
I'm sorry, to clarify, are you talking about when the market ceases trading
Yeah,
during the
like
day?
in the middle of the day.
Yeah.
Yeah.
So
What's
the market,
hope there?
Yeah, so the market puts in place, or the exchanges put in place certain limits after which they pause trading so that people that trade in the equity positions can take a deep breath. And we've actually seen those limits go into effect a number of times over the past month. More accurately, the last 2 weeks, where almost every down trading day we've hit what's called limit down, where the market, the S&P 500, for example, exceeds 7% to the downside. Trading is then halted for 15 minutes. What that allows people to do is just stop, take a deep breath. Let's see what kind of news is shaking out, and it helps to sort of stem the tide. Now, there's 3 different limit places within trading in any one given day. The first is 7%, that halts trading for 15 minutes. The next is down 13%, which halts trading for another 15 minutes. And the final one for the day is if the index goes down over 20% plus, then it halts trading for the rest of the day. We've not seen that. We've only eclipsed the 7% one, so it will stop for 15 minutes, and inevitably it kind of hovers right around that area. But the fact that we're seeing them suggests that it's been really nasty in the past couple of weeks. So, but again, now we're starting to see that trading in a little bit more normal range. We're starting to see that market behavior, and to me that suggests if we're not right at the bottom, we're getting there. I think we're getting there.
Okay. John, you mentioned availability of money. We've all seen some proactive initiatives by the government. People want to know where my free money is. So
That's true.
what would you advise for what government programs are available? What sort of stimuluses? What's available out there, and how should our listeners go about?
It's a great question. When you see the news bite, don't completely believe the news bite. There's a lot of details behind it, but that's a great question. Yesterday, I made it home from work, and my wife said people at work said that we were giving out 0% loans, and I said, well, I'd like to, but we can't give it out at 0%. So what that was the Federal Reserve said if banks need money, they can borrow it at 0% from the Federal Reserve. Okay, so if we need money, we can borrow it at 0%, and then we can lend it out. So it's great when you have a lot of loan demand, okay? When you're in the position we're currently in, most people are trying to save money and they're not really borrowing money. Now, the businesses out there that are hurting, they do need to borrow some money, and we'll get to that. But the 0% you heard was the Fed trying to stimulate the economy, okay? So that's number one. Now, over the last couple days, you've seen like phase one of a program and a phase two and a phase three that's coming, and you've heard there's SBA lending available. The SBA has a program, but we have not seen a lot of details, okay? Typically, an SBA loan, we underwrite it, we lend it, the government guarantees it. The SBA says they're coming out with a program in which they will do the underwriting and do the lending direct. So your loan would be from the SBA. Now, in a best case scenario, if Dan's company needs an SBA guaranteed loan from us, paperwork takes best case 4 months. And that's with us doing the work and the SBA only reviewing our work and stamping it. I don't know how the SBA can do direct lending in the time frame that is needed. So hopefully they'll come up with something, but right now I just don't know. The biggest thing locally that we can control that I would suggest to people is get with your bank or credit union if you have an issue sooner than later. Don't wait. If you have an employment issue or a payment issue and you need help, the best luck you're going to have is get with your current institution on a retail scale, on a mortgage or an installment loan. Your banks and credit unions are going to offer you some type of payment relief, a skip-a-pay program, some type of help, and they can do it relatively quickly. Commercially, same thing. Go to your bank, go to your credit union, and just let them know. Let them know, hey, I have a payment issue. I've already talked to all of our lenders are getting questions. I have customers that have called me and said, hey, what can you do? And in most cases, in the short term, you need to conserve cash. You can go, instead of a normal principal and interest payment, you can go to an interest-only payment. You could defer payments. It's interesting. You have the federal government right now saying, work with your customers, okay? But then when the regulators come in, they want to make sure you're not hiding problems, okay? When we get regulated, they come in, and if we give too much relief, then that becomes an issue for our regulators and our accountants. So I'm on a call every morning with the Michigan Bankers Association. There's a group of 150 bankers, and the biggest issue right now is how much and how quickly can we get relief out the door. So right now, we're pretty confident that if you're having an issue this is business owners for the most part, 90 to 120 days, we can get you pretty quick relief from payments, okay? And then our regulators will support us with that. Beyond that, that'll buy us a little time to see what type of other loans might be out there. So bottom line, if it's a payment issue with a loan, get with your bank quickly. If it's a loan you're going to need, that will take a little time. Again, go to your current financial institution and start the process.
Great advice. Dan, is there any special instruction for 401ks, Roth 401ks? Do you have any special advice for that element of investments?
Yeah, good question. So many 401k plans will have a provision whereby you can either contribute to them before you pay taxes on your wages. So that's more of a traditional saving mechanism. So the money will come out of your paycheck before you pay tax on it. It goes into your 401k account. It grows according to the investment portfolio that you've selected. And then when you draw the money out at retirement, you pay ordinary income taxes if you were getting a paycheck. The other provision that a 401k may have is what's called a Roth provision, whereby you can contribute to that account after you've paid taxes on that portion of money. They're really beneficial. There are benefits to both. It depends entirely on what your current tax situation is and which mechanism you decide. You can also midstream take a portion of your pre-tax 401k and convert it into the Roth portion of your 401k. Now to do that, you have to pay tax on the amount that you convert. But given current market conditions and the fact that your 401k balance is no doubt a little bit less than it was a couple of weeks ago, what that would suggest is you might be able to make that conversion and pay less tax right now. It's a conversation for you to have with your tax professional. It may make some sense, especially if you are in a lower income bracket. If you're, at the maximum income bracket, I don't know how much sense it makes other than you're converting a smaller amount. There's also different distribution requirements based on whether it's Roth assets or traditional assets. So that's something an investment professional can help you determine. It's not a blanket recommendation, Tim. Please don't take it as that. It's for every situation, it's different. You need to consult with your tax advisor, you need to consult with your investment advisor, and make the right determination for yourself and your family. But it's absolutely an option that's out there if your 401k allows for it. Now, you've already stopped working and you've converted your 401k into an IRA, similar provisions can exist between a traditional IRA and a Roth IRA. Again, conversation for you to have with your tax professional as well as your financial advisor.
Great, thank you. John, we all saw, most of us saw, that the Feds reduced the interest rate to near zero. What does that mean, if anything, for credit cards and bank accounts? And what's the rubber meet the road for our viewers?
Credit cards should come down a little. If you're paying 18% and it goes to 16, I don't know how much that, I don't know how much that helps you, but credit cards should come down a little. It's good news, bad news. If you're a borrower, your rates are going down. Your cost to borrow is now significantly lower. If you're a saver, deposit rates are already quite low, and they're going to go even lower. So if you're liquid with a lot of cash, there's just no place to put it. If you want to be completely safe, right? If you can put it in the stock market, but if you are a saver and you want completely 100% safe, those rates are not real strong right now.
Okay. Dan, we're going to wrap up here.
Okay.
If you would just share, again, just general wisdom, general direction in these uncertain times that we're facing, some closing comments, sir.
Sure, happy to. Just like everything else, everybody is hearing in the news, and headline risk is something that's very real. It can drive a lot of emotion. John sees it. We see it in our industry. Make informed decisions. Don't make emotional decisions. Consult professionals. We're listening to our healthcare professionals right now, to our administrative professionals about maintaining mechanisms to keep ourselves healthy and safe. When it comes to finances, Tim, it's no different. Take the advice, heed the advice of professionals. Don't make emotional decisions during really, really tough times. And I would strongly encourage everybody who is not currently working with a financial advisor, consider doing that. It's certainly well worth the money. You try not to self-diagnose if, something's going on inside your body. Consult a professional, a physician. I'd recommend that within your financial landscape and your financial life as well. It's well worth the investment.
Thank you. John, how would you like to close your comments to our viewers?
Take care of yourself, take care of your family, take care of your employees. And from a banking standpoint, banks and credit unions, we're all open. Okay, we're open. Your money's safe. Don't make rash decisions, and over communicate as soon as you have an issue, because your bank and your credit union will try to help you 100%.
Great advice. I want to thank our distinguished gentlemen today, Willis, Machnik, and County National Bank, for taking the time to be a part of our initial effort to help our community through this COVID. We wouldn't be here today for this specific event without the help of Walton Insurance. They have stepped up with this medium to offer these sorts of things. And again, on behalf of the chamber, I want to say that we remain committed to providing our viewers and our audience with the resources to best suit these trying times. Again, you can monitor us on our Facebook page and all social media platforms, as well as our COVID-19 tab on our website. So we hope you found this valuable, and I want to thank these gentlemen once again for giving time to the chamber and our viewers. We'll see you next time.